Have you ever wondered how much one Bitcoin will be worth in 2030? This question sparks curiosity in many minds, considering the unpredictable nature of the cryptocurrency markets. Bitcoin, the pioneer of cryptocurrencies, has been a roller coaster ride since its inception in 2009. Its value has skyrocketed, plummeted, and everything in between, leaving many to wonder, what's next? The future of Bitcoin is as intriguing as it is uncertain. It's a digital asset influenced by a myriad of factors, from technological advancements to regulatory changes, economic conditions, and even public sentiment. The complex interplay of these factors makes predicting the exact future value of Bitcoin more of an educated guess than a certainty. However, by understanding these influences, we can form a more informed perspective on the potential trajectory of Bitcoin's value. Today, we're going to explore some of the factors that could influence the value of Bitcoin in 2030. Let's embark on this exciting journey together into the future of Bitcoin. One major factor that could influence the value of Bitcoin is the simple economic principle of supply and demand. Now, this principle is not unique to Bitcoin or cryptocurrency, but rather it's a fundamental concept that applies to virtually all markets. At its core, this principle suggests that if the demand for something increases while the supply remains the same, the price will go up. So let's apply this concept to Bitcoin. Bitcoin has a unique characteristic that sets it apart from traditional currencies. Unlike the dollar or the euro, which can be printed in virtually unlimited quantities by central banks, Bitcoin has a fixed supply. There will only ever be 21 million Bitcoins in existence. This cap was built into the Bitcoin protocol by its creator, Satoshi Nakamoto, as a way to prevent inflation. As of now, over 18.5 million Bitcoins have been mined. That leaves less than 2.5 million left to be introduced into the market. This limited supply can create a scarcity effect, which can contribute to the value of Bitcoin. Now, let's look at the demand side of the equation. Demand is driven by a variety of factors, including the utility of the currency, market sentiment, and regulatory acceptance, among others. As more businesses start accepting Bitcoin, and as more countries start recognizing it as a legitimate form of currency, the demand for Bitcoin could potentially increase. Additionally, Bitcoin's value is often seen as a hedge against traditional financial markets. In a world of economic uncertainty, Bitcoin's decentralized nature and its potential for high returns can make it an attractive option for many investors. So, what happens when you have a fixed supply and a potentially increasing demand? Well, according to the law of supply and demand, the price should go up. However, it's important to remember that markets can be unpredictable and there are many other factors at play. So, as demand for Bitcoin continues to grow and the supply remains fixed, this could possibly drive up its value. But remember, nothing in the world of economics or finance is ever guaranteed. Another factor that could affect Bitcoin's value is technological advancements. As we move further into the digital age, technology continues to revolutionize the way we live our lives and conduct business. And the world of cryptocurrencies is no exception. Let's dive into the role of blockchain technology. Originally devised for Bitcoin, blockchain is a decentralized, distributed ledger that records transactions across many computers. What makes it unique is that once data is recorded, it cannot be altered retroactively, enhancing the security and transparency of transactions. With the continuous evolution of blockchain technology, we could see improvements in scalability and transaction speed, making Bitcoin an even more appealing option for daily transactions. For instance, the development of the Lightning Network, a second-layer payment protocol that operates on top of a blockchain, aims to accelerate transaction speed while reducing associated costs. This could potentially boost Bitcoin's utility and consequently its value. Now, consider the broader adoption of cryptocurrencies. As more businesses start accepting Bitcoin as a form of payment, its utility increases, which could subsequently drive up its value. Moreover, advancements in technology could lead to the development of more user-friendly interfaces for crypto transactions, promoting wider adoption among the general public. Furthermore, technological advancements could also address some of the current challenges facing Bitcoin, such as energy consumption. With innovations in renewable energy and more energy-efficient mining processes, Bitcoin's environmental impact could be significantly reduced, making it a more sustainable choice in the long run. In addition, the growth of decentralized finance, or DeFi, presents another avenue for Bitcoin's potential growth. DeFi refers to the use of blockchain to remove intermediaries like banks from financial transactions, which could further increase the demand and value of Bitcoin. Remember, the future is unpredictable. While advancements in technology could potentially boost Bitcoin's value, they could also introduce new challenges. It's crucial to stay informed and adaptable in this ever-evolving landscape. As technology continues to evolve, so too could the value of Bitcoin. The regulatory environment is another critical factor that could impact the value of Bitcoin. Let's imagine a future where governments worldwide have decided to embrace Bitcoin and other cryptocurrencies wholeheartedly. We're talking about a world where Bitcoin is fully recognized as a legitimate form of currency, with regulations in place to protect users and promote stability. In this scenario, the value of Bitcoin could skyrocket. The legitimacy conferred by governmental approval could lead to a flood of new investors, driving demand and prices up. On the other hand, a less welcoming regulatory environment could have the opposite effect. Picture a world in which governments view Bitcoin as a threat to their monetary systems. They could impose strict regulations that make it difficult for people to buy, sell, or use Bitcoin. In this case, Bitcoin's value could take a nosedive. Regulations could also impact Bitcoin's value indirectly. For example, if governments decide to heavily tax Bitcoin transactions, it could discourage people from using Bitcoin, leading to decreased demand and lower prices. Conversely, if governments provide tax incentives for Bitcoin use, it could encourage more people to buy and use Bitcoin, which could drive up its value. Moreover, the regulatory landscape is not the same in every country. Some countries might be more open to Bitcoin than others. This could lead to a situation where Bitcoin's value varies significantly from one country to another, depending on the local regulatory environment. We also need to consider the possibility of future regulations that we can't even anticipate right now. The world of finance is complex and ever-changing, and the same is true for the world of Bitcoin and cryptocurrencies. New regulations could emerge in response to new technologies, new financial crises, or new political realities. In conclusion, the regulatory environment is a critical factor that could significantly influence the future value of Bitcoin. It's like a double-edged sword. On one side, welcoming regulations could boost Bitcoin's value, but on the flip side, restrictive regulations could hinder Bitcoin's growth and slash its value. Regulation is a double-edged sword that could either boost Bitcoin's value or hinder its growth. Economic factors, both global and local, can greatly influence the value of Bitcoin. Let's dive into how these factors might impact the future value of this digital currency. Firstly, consider inflation. Traditional currencies are subject to inflation, which erodes their purchasing power over time. This is largely due to central banks' ability to print more money. Bitcoin, on the other hand, has a hard cap of 21 million coins. This scarcity could make Bitcoin an attractive hedge against inflation, potentially driving up its value. Next, let's talk about financial crises. Financial instability often leads people to seek out safe haven assets. Bitcoin, with its decentralized nature, has been seen by some as a digital version of gold. During periods of economic uncertainty, we could see a surge in demand for Bitcoin, pushing its price upward. However, it's important to note that Bitcoin has yet to fully prove itself as a safe haven asset. During the stock market crash in early 2020, Bitcoin's price also took a hit. This suggests that Bitcoin's value could be tied to the health of traditional markets in ways we don't fully understand yet. And what about the overall health of traditional markets? Well, when traditional markets are doing well, investors may feel more comfortable taking on riskier assets like Bitcoin. Conversely, in a bear market, investors may pull out of Bitcoin and other high-risk assets and move their money into safer investments. Lastly, let's not forget about the impact of world events. Political unrest, changes in trade policies, and global pandemics can all create economic uncertainty, which could influence Bitcoin's value. So, how will these economic conditions impact Bitcoin's value in 2030? Well, it's hard to say for sure. Predicting the future of any financial market is a tricky business, and Bitcoin is no exception. But one thing is clear: economic factors will play a crucial role in shaping Bitcoin's future. In an unstable economy, Bitcoin's value could skyrocket, but it could also plummet in a stable one. Lastly, consumer sentiment and adoption could play a significant role in determining Bitcoin's value. In the world of cryptocurrencies, public perception is everything. It's like a ripple effect. If people believe in the value and future of Bitcoin, they're more likely to buy and hold it. This increased demand can drive up the price. On the other hand, if people start losing faith or become skeptical, they might sell their Bitcoin, which could lead to a decrease in its value. Now let's talk about adoption. It's no secret that Bitcoin has been gaining traction. From small online retailers to big-name brands, more and more businesses are starting to accept Bitcoin as a form of payment. This broader acceptance not only increases the practical use of Bitcoin, but also contributes to its legitimacy and trustworthiness. However, it's essential to remember that adoption is not just about businesses. It's about everyday people using Bitcoin in their daily lives. It's about your neighbor buying their morning coffee with Bitcoin, or your cousin sending you some Bitcoin as a birthday gift. This widespread consumer adoption could be a game changer for Bitcoin's value. But it's not all sunshine and rainbows. There are hurdles to overcome. Bitcoin's volatility, for example, can make people hesitant to adopt it. After all, who wants to wake up and find out that the Bitcoin they used to buy a coffee yesterday could have bought them a fancy dinner today? And then there's the issue of understanding. Cryptocurrencies can be complex and not everyone gets it. Education and awareness are crucial in fostering adoption and positive sentiment. So what's the bottom line? The value of Bitcoin in 2030 could be significantly influenced by how the public perceives it and how widely it's adopted. If Bitcoin continues to gain acceptance and trust, its value could soar. But if public sentiment turns negative and adoption stalls, the value could take a hit. If Bitcoin continues to gain acceptance and trust, its value could soar. So, with all these factors in mind, what could one Bitcoin be worth in 2030? The future of Bitcoin, like any financial market, is shrouded in a cloud of unpredictability. While we can analyze trends and make educated predictions, the reality is that nobody can say with absolute certainty what the value of one Bitcoin will be 6 years from now. The very nature of Bitcoin's decentralized global structure makes it incredibly susceptible to a wide range of influences. Technological advancements, regulatory changes, economic shifts, and consumer sentiment all play a significant role in determining its value. Let's not forget the role of supply and demand. Bitcoin's supply is capped at just 21 million coins. So as demand rises and supply remains fixed, the value of Bitcoin could potentially skyrocket. However, it's also important to understand that Bitcoin operates in a highly volatile market. Its value can be influenced by events that are impossible to predict or control, such as geopolitical crises or technological breakthroughs. So, while we can speculate and daydream about Bitcoin reaching astronomical heights, it's crucial to approach these predictions with a healthy dose of skepticism. Remember, Bitcoin is not just a financial asset, it's also a technological innovation. Its future value will not only be determined by how much people are willing to pay for it, but also by how its technology evolves and how it's adopted by businesses and consumers worldwide. While we can't predict the exact value of one Bitcoin in 2030, we can say that the future of Bitcoin is likely to be exciting. It's a pioneering technology that has the potential to disrupt traditional financial systems and create new opportunities for individuals and businesses alike. Regardless of the exact value, one thing is certain: Bitcoin and other cryptocurrencies will continue to be an exciting part of our financial future. We've covered a lot today, from supply and demand to technological advancements, regulatory environment, economic factors, and consumer sentiment. Let's take a moment to wrap up our discussion and explore what you can do next. We started our journey by understanding the future of Bitcoin. It's clear that the potential is immense, but so are the uncertainties. The unique blend of supply and demand dynamics, along with the cap on Bitcoin's total quantity, presents an interesting scenario for its future value. Next, we dove into the depths of technological advancements. We discovered how these improvements are not just shaping Bitcoin, but the entire cryptocurrency landscape. The rise of quantum computing, enhanced security measures, and more efficient mining techniques are just a few examples of these advancements. Our conversation then shifted to the regulatory environment. We realized that while regulations can bring stability and trust, they also pose challenges. The ongoing tug-of-war between regulation and innovation is a key factor influencing Bitcoin's future. Economic factors were our next stop. We talked about how global economic situations and financial crises can impact Bitcoin's value. The decentralized nature of Bitcoin certainly adds an interesting twist to traditional economic theories. We also touched upon consumer sentiment and adoption. The growing acceptance of Bitcoin by businesses, consumers, and even nations is a clear indication of its increasing influence. However, public sentiment is volatile and can swing the pendulum in either direction. Now, what can you do with all this information? The first step is to continue learning. The world of cryptocurrency is evolving at a rapid pace, and staying informed is crucial. Read, research, and engage in discussions. Remember, knowledge is power. Secondly, approach the crypto market with curiosity, but also with caution. It's a dynamic market full of opportunities, but it's also unpredictable. Your decisions should be well-informed and based on thorough research. Remember, the future of Bitcoin is as exciting as it is unpredictable. Stay informed, stay curious, and as always, tread wisely in the world of cryptocurrency.